All right, and now we're going to explore an ESOP shuffle with a founder-friendly approach. Toggling over to our Excel, you'll see the very similar format as before, and let's just run through the numbers again. So we've got a 10 on 40 for a 50 million post, still got our million shares outstanding, and our desired 10% ESOP. You can see here 50, 10, 40 is the effective pre-money, and now the Series A is what we thought it should be, $40 for a price per share, versus the 35 as we saw in the previous example. So how does that sort of hit the cap table? Well, remember how we said that there was no ESOP prior to this Series A? So if you look at the cap table, you can see the founders, they still have their million shares. They're always going to keep their million shares. But now look at the difference in ownership. Here, the founders now have 72% and the VC has 18%. So effectively, the VC is taking or sharing the dilution. Before they had 20% ownership, and now they have 18. This example is a little more concentrated with the Series A investor because they're the only investor represented, but normally in a full cap table where there are multiple investors, all of those investors will share in the dilution, not just the Series A.